High credit score holders, brace yourselves. Mortgage fees could skyrocket in May. Americans who have worked hard to build up their credit scores may not be happy with the latest news that a new federal rule could benefit those with lower credit scores at the expense of those with higher ones. Those most likely to be affected will be the upper middle class, those making $100,000 to $500,000 household income per year. Homebuyers with a credit score of 680 or above will have to pay around $97 more per month or nearly $1,200 more per year than those with lower scores when taking out a $400,000 home loan. This rule will be effective starting May 1st, 2023, just before the peak spring buying season. It will impact mortgages from private banks across the country based on loan level price adjustments, LLPAs, established by Fannie Mae and Freddie Mac. Consumers with high credit scores ranging from 680 to above 780 will see a hike in mortgage costs, with the most significant increases felt by those who put down 15% to 20% on the home. The new LLPAs essentially impose fees or a tax on borrowers with high credit scores to subsidize those with low credit scores. The goal is to support federal initiatives to increase affordable housing across the country. The Federal Housing Finance Agency, which oversees Fannie Mae and Freddie Mac, has long sought to give consumers more affordable housing options. However, experts fear that the new rules will make an already challenging market even more challenging for home buyers. David Stevens, a former commissioner of the Federal Housing Administration during the Obama administration, wrote in a social media post that this confusing approach won't work, and more importantly, couldn't come at a worse time for an industry struggling to get back on its feet after these past 12 months. To do this at the onset of the spring market is almost offensive to the market, consumers, and lenders. It is worth noting that these new rules haven't received a ton of media attention, other than from conservative-leaning outlets such as the Washington Times, the New York Post, and Fox News. And there is nothing on any official government website, including Fannie Mae's, indicating additional fees for certain home buyers or how much they're going to be. This leaves many of us to wonder, is there more media suppression of info, or is this really a nothing burger? Most of the media coverage is based on the Washington Times coverage and reporting, but if you simply pull up the Fannie Mae LLPA matrix, it's easy to see the changes. If high credit borrowers do have to pay more for their mortgages due to the new rules, they will face one more hurdle in a market that is already full of challenges. Home prices remain historically high in many parts of the country despite a sharp rise in mortgage rates over the past year. Furthermore, many regions of the country continue to suffer from low inventory, especially for entry-level buyers. According to recent data from Zillow, entry-level buyers are dealing with faster rising prices and more competition than other house hunters. While prices rose by 8% for the least expensive one-third of houses, the most expensive homes lost value for the first time in more than a decade. Zillow chief economist Skylar Olson says buyers shopping for the least expensive homes this spring aren't noticing much difference from the pandemic-era market heat, and goes on to say, competition is fierce, but there aren't many homes for sale, so buyers should be patient, but be prepared to move quickly and anticipate a bidding war once they find the home they love. If you want a coach in your corner and would like to know more about the coming changes and how it affects your buying power, reach out to me and we can set up a time to discuss.